Take my hand, I'll take you higher than you've ever been. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Let's go right into the charts, shall we? Bada bing, bada boom. Here we go. So if we look over here, it seems that we bounced off of the one level of the bearish trend-based fib extension level here and reclaimed the diagonal fib level of the 0.5 for the time being. Let's go. By the way, this is just going to be a quick update. I had my daughter's sports day yesterday for her school, and today I will go to her karate competition. So I have to leave out quite soon after this. It is the weekend. It is low liquidity, so there's not much going on. But let's just go see what's going on in the liquidity here. What is the liquidity? Well, it's when people trap their money into charts to be burned to a crisp by the market maker for not using a stop loss. And we get to see who those people are thanks to High Block Capital. So you can hit the like button on that. It is a paid subscription that we provide to you for free, so it's a nice little update you can get on how that changes. So here's the 1 minute time frame and the liquidity over the past 6 days. So it looks like they pinged yesterday. We talked about them pinging more shorts than longs, so they came for those shorts. They ate this 50x pool of 139 million.
Fatality.
And that was stacked quite nicely with the pool over here for 161 million. I don't think they actually reclaimed that just yet. So these guys could still be on the table. This $161 million at 27,185. So that pool could be still edible to the market makers. And also up here you do have some pools up here at 27.53 at $186 million. And oops, why did it do that? And another pool up here at 187 million at 27.4. So this path to the upside is paved quite nicely and caked quite nicely with all these pools for them to take. So are they going to go up to this level? As it stands right now, the ramen noodles are thicker to the upside than the downside. There's more soup and broth down here than up here, so it suggests they go grab that. So let's go expand our vision to the higher time frame, and on the higher time frame, this heat signature also suggests upside for those pools to the upside of 10 billion and more. And if we expand our vision even further to the 1 month time frame, we can see if that continues. The higher time frames aren't going to change so much, so if you watch this day in and day out, you will know that the imbalance is that $150 billion down at 25.2 that could be taken at any moment. Let's see how y'all are doing. Shout out to everyone here. Okay, so you do have that imbalance on the monthly time frame up to the 30K region, suggesting that you could go up to that, but there's a long path to get there. And $15 billion at 27.8, and another double digits at 28.4. But other than that, single digits on the monthly time frame. At least the 15 billion at 27.8 could be the target in the interim. And we head to the 3 month time frame. Okay, let's load, shall we? Let's not take forever and a day. Sorry. Alright, so if you look over here, you see the 150 billion we were talking about. There's 56 at 25.6, 60 at 25.4, and 50 at 25.2. And the entire path down there has a little bit of liquidity starting to stack up. However, you got 23 billion at 27.8, 14 billion at 28 even, and these are just a hop, skip, and a jump away. So do you go up before you go down? This suggests so. If we were going to attack these pools, we would stop out some of these 50x 25x shorts before we would come down into that and install the idea of longing before coming down in. And the path to the upside isn't without merit. So there is a $50 billion pool starting from 30,002, and you got double digits all the way leading up to 31.2 with another 50 billion and some more double digits leading up to 44 billion at 32.8 and 50 billion, nearing 50 billion at 33.4. So this entire region is not without being ignored, but you do have that thicker band of liquidity down below. So are they going to eat into that? That is the question. And if you go to the 6-month time frame, you start to see that downside projection possibly being recovered as well. Boop boop boop. Dragons, yo, what's up? So this is where it starts to get interesting, because if you get some of this liquidity spawn, some of the divergence here, are you going to start to make this narrative shift to the upside at some point? Because if you eat into this liquidity and you get the divergence, there is a path to be made, an argument to be made to go grab this stuff at some point too. So I'm not exactly 100% bearish. I just think that the imbalance of these pools down below, even just taking one of them or two of them and getting that divergence spawned, could be enough to start to make the narrative shift to the upside. It is noteworthy that there is 100 billion down at 22.5, but if we were to head all the way down to that region, that would be a shift in narrative to a bearish sentiment. But we have done something similar where we pierced down below only to go right back up. So do we pierce all the way down to that region, take all of it, and then go? They don't always take everything on the table. I don't understand the intentions 100% of the market makers, but they do leave stuff behind. They don't always clear their plate before they put their dishes in the dishwasher. So if you look at this here, they left $162 billion on the table at 25.6 on February 23rd, and they reversed all the way down, did their massive retrace till March 10th, and then they came up and cleared their plate. So the sense, the leaving behind of $162 billion doesn't make sense to you and I, but for them it maybe makes more sense. So do they leave some of this pool behind and start to make a narrative shift at some point? There could be some story that we are not privy to that they could do. On the higher time frame, the 25.2 region has 83 billion and 100 billion at 24.8 and 100 billion at 24.4. So, and then it gets sparse at 24 even for $20 billion. And yeah, the upside path now starts to get a little bit thicker on the yearly time frame, and this is where you start to see where it starts to make you go and you wonder, is there going to be a stab at these pools in the future? 32.4 has $126 billion, 32.8 $100 billion, and 33.2 $100 billion. And this entire region is starting to get thick now, which it was not prior. As you can see here, there was nothing up here. So this is starting to make a narrative to the upside occur at some stage. Interesting to note. So let's go back to the monthly and head into the charts, because time is limited and of the essence and of the mind. But that's for another time. Haha, pardon the quote. All right, so here we go. We are in the 0.5 of the diagonal fib level. Let's go into the regular Binance chart and see what we were projecting last time. So we were talking about the circle happens to coincide with some pivotal moment of the cloud recovery. We did come up, but we did not hold it. We came up, we came down, and now we came back up to that cloud that happens to be, I believe, the 12-hour cloud, if I'm not mistaken. Oh yeah, we need to turn on our oscillator, so let's do that now. Oops, my heads-up display was on the whole time. That's too bad. All right, so I believe this was the 22-hour. We're going to see the 22-hour closed its final candle in an hour alongside the daily close. Wait, was that the 6-hour cloud? I think it was. It was the 6-hour cloud. So this was the 6-hour cloud idea we were talking about. We were saying that this curvature of the cloud was suggesting some sort of bounce out of here, which we got, but we gave back completely. And then this pivotal moment of reclamation of the cloud would be coming. And we got the timing kind of right for that reclamation, which was yesterday. And then now you're seeing this shift in the cloud idea. So it's not 100%. We did get the bounce, but it did not hold. And then now we're getting a second bounce at that same stage of that cloud. So these cloud curvatures do give you that preemption of narrative shift in structure of some way, shape, or form. What is it that we're looking at here? This is momentummaster.info, link in the description for more. This is a volume-based cloud that you can scroll down to features on and toggle and read about at your leisure. Okay, so as we reclaim this 6-hour cloud here and start to bounce off of it, we are getting the cross up here. Previously we had a cross down that we were talking about having to negate on the 6 and the 4 hour. If you recall, the 6 and the 4 hour did have these cross down events to contend with, if you will, and now they've been contended with, and we are now crossed up on those time frames because we had the 22 and the 12-hour cross up alongside the daily. So having this cross up event of the baselines here was something that was to note, and why I was saying it was interesting that these higher time frames could hold us here. So the daily and the 22 are holding, and if we look at the 22-hour on the oscillator B, let's see how that looks. So we're starting to get that curvature to the upside here. We got one more hour for the candle close here, to 42 minutes rather, for it to ensue. We had a little bit more curvature down than we saw prior, and this curvature up has stopped and gone down a little bit, so it's not exactly curving in the manner we were thinking there on the 22-hour. Staving, giving a little bit more insinuation to time being the contender here. And yeah, if we look at the 12-hour time frame, then we're going to see that the 12-hour also has this curvature to the upside, with the Williams still in your favor on that rising sun play, with the baselines holding. All right, and if we go to the 6-hour time frame, that's now curved up. Has that been confirmed? It was confirmed in this candle close, so this is now a confirmation of the cross up, and the baseline is holding beneath the price here. And yeah, so you could be seeing this idea of playing a little bit of a scalp to these upside pools that we laid out for you over the last few days that have yet to be recovered. Are we reclaiming this 4-hour cloud? It looks like we very well might reclaim it. So these pools to the upside could be the case. And you do have the 4-hour kind of starting to play out here, getting not so much volume involved though. It is the weekend. And if we go to the hourly time frame, hourly play looking ambiguous and choppy here, but wound back up for a pitch to the upside. Perhaps we did pierce through and then hold this while resetting some of the stochastic, which insinuates this to curve up and pierce up into these regions that we outlined the other day. So these regions at 27,586 also coincide with these pools up here. There's a 50x pool we were looking at 27,531, $186 million at 50x leverage, and that's a huge noodle up here. So coming back into this region would be the smart play to take off the table first and foremost before you consider going lower or higher. So yeah, this pool does seem to be the juicy target of the moment. Is that going to occur over the weekend? We are on currently Sunday morning my time, Saturday morning for the rest of America. So are we going to see that attack over the weekend, or is it going to lead into Monday? It looks like it could occur over the weekend. We'll see about that though. All right, well, let's go into the USDT dominance. I will figure out what is going on here after going into the Bitcoin dominance and so on. It is the weekend, so we can look at that. Let's go to total first. Let's look at total real quick. Total market cap of cryptocurrency. So we had this bearish trend-based fib level put out a while back. Looks like it was out since April 26th, and we've been slowly bleeding out into that region. But we are getting the cross-up event on the daily time frame here, suggesting more upside to occur, at least in the sense of coming to this cloud region and getting rejected off of that cloud. Whoa. So perhaps coming up to the cloud and rejecting off of the cloud at some point here on the daily time frame. The curvature of the cloud is currently still possibly suggesting that it is finished, because it is curving in a manner here, if you look. But that can change at any moment, as we have seen. And we are currently holding the 786, which is the previous local bottom level of this larger range on the daily time frame. If we go to the 12-hour, cloud still pretty thick. I wouldn't expect us to get back into that relatively soon. We do pierce up sometimes into these thick clouds and get rejection. Here tried to reclaim it while it was thick and got rejected. So same thing occurs to the opposite side. You tried to break through, you got rejected, break through, you got rejected, and these were support structures. So the thickness of the cloud does give some suggestion of support and resistance. So this does give you the idea of resistance on the total market cap breaking up above this 1.116 trillion mark on the 12-hour time frame. And you do have that double top pattern trying to insinuate a stab to that upside path, as per what we just went over with Bitcoin. And we are reclaiming the 6-hour cloud, which is also pointing to the upside here, and we have that thinning out similar to the Bitcoin chart. So that path to the upside could be the play here on total market cap. And you are reclaiming the 4-hour cloud just like Bitcoin as well. It's a very similar chart actually. And if you go to the 1-hour time frame, we have reclaimed that and are starting to play it out with the cross-up event intact on the 1-hour time frame here. See, so these crossover events, which can be alerted to your phone alongside the dynamic alert system of these things, you could get these to cross up and play out in their own right on each of their time frames. So if you were looking for a scalp, you could have gotten these circle alerts and taken one of these thinned out cloud plays to the upside if you were so inclined. Same here. If you got the 6 time frames overbought and you got the cross down here, you could have confirmed that's where you would want to short. So these things are scalable to the different time frames you like, and you can set the alerts accordingly. All right, so let's go to the dominance chart real quick, and then we will bid you adieu. Bitcoin dominance. How's everyone doing out there? Enjoying your weekend? My daughter's sports day was quite hot out in the sun. I found a place in the shade to watch it from, but she did a little dance with her class, and they had a relay. It was a nice thing to have. They previously only had like 2 people, or they only allowed 1 family member to attend, which was weird due to COVID, so I couldn't attend for the last 2 years. So this is the first year I could actually attend alongside my wife. So it was nice to see her progress as a grade 3 student now. So we're getting the cross up event potential on the 6 hour as it's flashing here for the upside idea of dominance coming back into play. So if we see this confirm in the next 34 minutes with this cross up event, which we will not be around to see, if it reclaims this cloud on the 6 hour time frame as it has on total and Bitcoin, and gives you this cross up event confirmed. See, that's what I mean by confirming. It needs to confirm and close with the candle with this helix intact. So if it closes with this helix intact, it does ensue that more upside for Bitcoin dominance could be the play, which means more people will be wanting to get into Bitcoin for the interim, which coincides with that upside play we were talking about. So this could be a move to this upside path for the dominance of Bitcoin dominance. Now, I could go into more details with the other time frames. It looks like this is one thing where Momentum Master shines above all else, is I don't need to do that necessarily, because I can look here at the screener and see the 5 minute is overbought, the 15 minute is overbought, the 1 hour is getting to be overbought but most likely has curved up momentum in our favor, and the 4 hour is most likely curved up and in our favor. See? So I don't even need to look at the stochastic RSI when I have this little screener here, and you can kind of see it gives you, it's called the Stochastic Health Monitor. So you can go to Momentum Master Ultimate and read about the stochastic health. It gives you real-time access to data across 4 time frames in order to help you make sound decisions about the probability and health of your trade. So I got used to reading this only, and I don't need to flip. If I'm reading it on my phone, I don't need to flip between the time frames because it gives me a display of all of them there, which is quite nice. And then you get this other one down here where you can see the higher time frames too. So yeah, the 15 minute is getting gassed and it's pushing the 1 hour up, and the 4 hour play is intact. How high up do we go? Do we just make it to this range and we're just doing consolidation here? That could be the case, but it's very similar to the Bitcoin chart in that it's trying to take out this little range idea here, and you have a BPR fair value gap up here too to come up into. I don't know how the smart money concepts play out on Bitcoin dominance chart, but I do believe you can trade it as an asset. I've never done that, but some people might. And if we look at the USDT dominance, which my man CNC likes to point out, let's go check out whether the USDT dominance is doing well or not. So the 4 hour is resetting here, the 1 hour and the 15 and the 5 minute is also resetting in a manner. You're getting the cross down event, the opposite occur. So this means people are putting their USDT into stuff. So by this coming down, dominance of the USDT dominance coming down means that people are putting their USDT into stuff. So rather than draw your bull flags like some people like to teach like this, and they try to capture price in these bull flags, which is generally a trap and I'm not really into doing anymore. What I would do instead is get a linear regression channel going. So regression trend, if you go into your trend line tools and favorite regression trend and parallel channel, those are 2 things that you can do very easily. You just 2 clicks on your regression trend and it will put it in a channel. Now, why are channels better? Well, the range trading is a thing, so that's one reason, and it can show you the equilibrium point that we're at right now. And if you fail that equilibrium holding, you drop to the bottom of the channel, and then the dropping of the to the bottom of the channel happens to be down here, which is not part of the bull flag structure, which is why bull flags are traps and nonsense. So you would like to use this regression trend instead. And so you can extend the regression trend as far back as you like if you have trouble spotting where these regression trends, these channels lie. You can do them in upward channels like this, and it'll put it in instantly. And it's a very nice tool, free with your trading view. You don't need an indicator to do this, and this is pretty nice. And so you could learn to see where these diagonal equilibrium zones are, and that we could be possibly failing out of it and jumping down on the dominance here. And then if you're done with that and you want to just trap it with your parallel channel, which is located just above the regression trend, you do the same thing with 3 clicks. You click once and then click twice to finish it, and then you can drag it up and down, so you can make your own little channel that we're in. And so if we fail up here, we're coming down into this. So coming down, the USD dominance dropping implies that we are putting the USDT into trades. And we previously recovered this idea that we put out, which is nice. We came right to it to the wick, and that's in the past, so we can let that go and let this go as well. All right, so this is where the path to USDT dominance is attempting to lie. Are we getting the cross down event occur on the 4-hour? It is locked in, so we could see this drop of USDT, meaning USDT will go into a trade. And at this time, the Bitcoin dominance going up with the USDT dominance going down implies that it's going into Bitcoin with the Bitcoin surge. So this Bitcoin dominance and this pump potential to this top of the range idea could be the play here. We do have the cross up event on the 4-hour, and the liquidity on the 1-minute time frame suggests going up to the 27.53 top of the range zone on this 1-minute time frame. And that's my story, and I'm sticking to it, and I must go to my daughter's karate tournament. So I hope that was illuminating enough for you. So thank you very much. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same with the fire, the accuracy, and the precision it needs to capture your and keep your attention. So we'll keep that at it, and we'll catch you on the flip side. Peace.